Hey YouTube, this is the Robinhood Investor. Hope you had a great day of trading. As always, I really appreciate your support, so if you like this video, give it a thumbs up, and if you want to learn about investing, subscribe to this channel. Today I'm going to talk about Kohl's stock, which surged 36% before market open after reporting recent acquisitions. So today you can see up 36%, currently priced at $63 per share. Past year up 39.87%, past 5 years up 57%. So a lot of volatility in recent years, lots of ups and downs, but due to recent news, it surged 36%. So Kohl's operates in the department store business, carrying apparel, footwear, and accessories, also merchandise in the home goods space, beauty products. So a variety of products in the kind of like a department store. Scrolling down a bit, you can see out of 17 analysts, 47% give it a buy rating, 41% give it a hold. Now taking a look at the recent news, you can see Kohl's share surge as takeover offers emerge from suitors, including Sycamore, which is willing to pay at least $65 per share, implying a 39% premium to the stock's last close of $46. People familiar with the matter. So Sycamore came 2 days after Acacia Research. So there's a lot of different potential buyers, and both Sycamore is actually a private equity firm. Want to pay $65 with a 39% premium. 2 days after Acacia Research, which is backed by activist investment firm Starboard Value. Scrolling down a bit, you can see that Acacia and Starboard would likely to partner with Oak Street Real Estate Capital. In the past, Kohl's has opposed such sale leaseback deal. So oftentimes there's these offers, but Kohl's may not necessarily take their offer. So there's a lot of positive sentiments around Kohl's with this news, and we'll see how it proceeds. Taking a look at the earnings report from Q3 2021, which happened back in November. Just want to see how it performed that quarter. So overall achieved record Q3 earnings as both sales and margins exceed expectation and raised full year sales and earnings guidance. So overall, very positive Q3. You can see the results. Sales of 16% versus Q3 2020. So that year-over-year growth is great to see. Taking a look at the metrics, you can see net sales. This is October 2020 versus October 2021. So net sales and total revenue. First two lines, you can see that year-over-year growth with a solid gross margin rates of 39.9%, almost 40% gross margin. So it's great to see that kind of margin. Net income of $243 million relative to negative $12 million. So it's great to see that strong net income. And it's good to see the cash and cash equivalents so that during bad times that it can sustain itself. And taking a look at the gross margin, as I mentioned, you can see that year-over-year increase from 35.8 to almost 40%. In terms of takeaways, you can see it's tightly managed inventories and achieved 10-year high in inventory turn. Further scaled pricing and promotion optimizing strategies. Cost of shipping tailwind from lower digital penetration of 29 versus 32%. Downside is higher transportation costs due to global supply chain challenges. So overall across retail, it's been facing a lot of global supply chain challenges. So that's why there's an increase in transportation costs. Taking a look at SG&A expenses, that's what it takes to run the business. You can see this year-over-year increase from 32.7% to 30% of total revenue. Now, taking a look at the takeaways, improve store labor productivity, lower technology spend, improve market to sales ratio. So that's a lot of positive news, but downside is higher wage costs across stores and distribution centers. So there's some pros and cons. More efficient, but higher wages and higher supply chain costs. Taking a look at the cash liquidity position at its starting of 2021, it was $2.2 million. By the end, it's $1.8 million, which is great to see. Even though it slightly decreased, but still they have a pretty strong liquidity overall. Taking a look at the 2021 outlook, net sales, they hope to have mid-20s% increase versus 2020. So pretty strong double-digit growth. Operating margin of 8.4 to 8.5% from 7.4 to 7.6, and adjusted earnings per share of 7.1 to 7.3. So it's great to see that from 5.8 to 6.1. Overall, 2021 is looking good for Kohl's. CapEx high end of 600 million to 650 million range. Dividend of 25 cents, quarterly dividend payable of December 2021. And they're buying back shares, which means they're confident in their future outlook. Overall strategy, Kohl's has built a powerful foundation, 65 million active customers, 30 million loyalty members, 29 million Kohl's charge card holders, very strong portfolio of brands you can see here, Nike, Adidas, Levi's, Under Armour, Tommy Hilfiger. A lot of these brands are recognizable. Stores, you can see 90% of stores generated over 1 million in four-wall cash flow. 95% of Kohl's stores are off mall. 80% of Americans live within 15 miles of a Kohl's store, so it's within proximity of Americans. 43% of digital sales fulfilled by stores in 2020, and 10% higher digital sales in markets with stores. And taking a look at the digital, you can see they're investing more in digital, and it's paying off. 40% of digital sales penetration in 2020, 1.6 billion website visits, and you can see the compound annual growth rate of 17%, with 2020 being at $5.9 billion. So it's very strong digital sales growth. Taking a look at the overall strategy, to drive top-line growth, they're looking for a destination for active and casual lifestyle, leading with loyalty and value, differentiated omnichannel experience, expanding their operating margin, disciplined capital management, and strong organizational core. So overall, they're driving a lot of value into their digital as well as their in-store portfolio. And I think Kohl's, even though their stock price is pretty volatile in the past 5 years, a lot of their real estate is valuable, and some of these private equity firms are seeing the value in that and potentially want to buy that network of real estate. I personally don't hold any Kohl stock and don't plan to take any position in this, but it's interesting to see that there's such positive sentiment around this recent news, surging 36% today, and we'll see how it plays out. That's all for this video. What are your thoughts on Kohl stock? Comment down below. Remember to use my referral links below, and both of us get $20 for using personal capital or free stock for using Robinhood. If you like this video, give it a thumbs up, and if you want to learn about investing, subscribe to this channel. See you next video.